What don't you like about the company?
I think the returns profile in overall beer is going to slow relative to history. The top-line growth environment for beer is going to normalize, and the outsized returns you've seen from M&A in the past, I think, is also going to normalize. Therefore, we do feel that there are better places to be invested within beer, such as Carlsberg or Heineken.
The idea, though, for doing this IPO is that they see great potential in Asia, right? And you yourself say that they have attractive existing businesses in China, South Korea, and Australia. Will this help?
Yeah, I think from an M&A standpoint, given where the group leverage is, it does make it quite hard to participate in M&A. There are opportunities, as recently highlighted here, both within the Philippines and also Thailand and Vietnam. And I think having a local listing certainly does help to facilitate M&A through equity as well as debt there.
Yeah, you mentioned debt there. This is something that Sophie brought up a moment ago as well. Are you concerned about the amount of debt the company's carrying?
I think the company has been, quite slow to delever for a number of reasons. There were, some quite penal disposals that were made following the SAB Miller transaction, such as in China, such as in the US, that certainly came in below the overall price they paid for SAB Miller. The company's also been, hit by negative FX worth $2 to $3 billion over the last couple of years. So, that's certainly slowed down the rate of delevering. Now, the company has, cut the dividend last year, and through this IPO, they could theoretically delever another half a turn of net debt to EBITDA. So that will help to accelerate the delevering process, which I think does help the overall group investment thesis for ABI. Makes it more investable.
All right, so we've got pricing today, probably towards the lower end of that $40 to $47 Hong Kong range, and then trading begins on July the 19th. So when we get going, how do you see it trading in terms of price to earnings?
Well, the published number that we've put out there for this business is closer to $45 billion. The low end of the range is more like 54. The upper end of the range is more like $64 billion. So we're certainly coming in at a lower valuation relative to what it's being priced at. And that really reflects the fact that this business isn't a pure play China business. It's roughly half Australia and South Korea, where the markets are quite mature and therefore slower growth, and therefore should deserve to trade on a lower multiple. I think, overall, this is an attractive business. They've done a fantastic job of pivoting the overall Chinese business towards premium, and the Chinese business in itself is attractive, but it does feel like 18 times EBITDA, which is the low end of the range, is certainly ahead of the 15.5 times that we're ascribing towards this business.
They, of course, cut their dividend in half last October. Will they be able to make a comeback there?
I don't think there's any real need to necessarily, start growing the dividend back to where it was before until they've delevered further. Part of the ABI story over the last 20 years has been, a major M&A roll-up, and it's, a real part of their DNA. So I would expect the company to continue to delever at the group level before participating in major M&A.
So when you said you don't necessarily like AB InBev compared to other companies, who do you like?
Well, you've got other companies. If you were to put their Asian business, such as Heineken or Carlsberg, at a similar multiple to what is being IPO'd here, then the stub at those two businesses, i.e. the leftover businesses, do look much, much cheaper relative to ABI. So, ABI's stub is on about 12 times EBITDA, Heineken's stub's on about 10, and Carlsberg's stub's on 8. So I think, Heineken has got, better natural growth, and it's probably less well-liked. There's a wider dispersion of analyst recommendations on a company like Heineken. And I think for Carlsberg, the historical track record of this business was slightly patchy, and there's still a lot of low-hanging fruit to be done here on self-help and also their Chinese business, which is very, very attractive.